Hello everyone, my name is Lawrence and thank you so much for watching my channel. And if you haven't subscribed, please consider to subscribe and also hit the bell notification in case I release another video, you'll be able to be notified. So today I'm going to be discussing a very important yet controversial topic, that is, when is it the right time to buy a stock? What is it the right moment to buy stock? When can I buy a stock? Can I time the stock market? So those are the things that I'm going to be talking about. But before I start discussing, I have a video of Warren Buffett, the greatest stock investor, when he was being interviewed on whether the New York Stock Exchange stock market is overvalued or undervalued. And this is what he had to say. Please watch and listen carefully. I'm very sure you'll get 2 or 3 things that you learn from this video. So let us watch it, then we discuss after. Also, I discuss what I learned from this video or from him as the greatest investor. So let us watch.
The stock market is really on a record tear, I think it's fair to say. You always draw the distinction between price and value.
Right.
Are we seeing a run-up in value or in price?
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now.
Well, look at where it is right now, because one of the things you take a look at to measure it is the total value of the stock market compared to GDP.
Right.
And if you look at that graph, it's at the high point. It's the highest it's been since the tech crash back in the late 90s, as a practical matter. Does that mean we're overextended? Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other. And your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it?
At the same time, there are some stocks that are bargains, good bargains from your point of view. When the market's up this high, that means values have gone up quite a bit. Yeah. And you're sitting on a lot of cash, $110 billion. As a practical matter, don't we have to have more fear in the marketplace before you're really deploying a lot of that cash?
Well, I love it when there's, I don't love it for the country as a whole, but I mean, that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.
Thank you for watching. I hope you enjoyed the video. So from the video, from the man himself, you heard that you can never catch the bottom of the stock or the top of the stock. But there are some things you can do, and those are the 3. For me, I get like 3 things that I can take, or lessons that I can take from the man himself. Number 1, you have to stay invested or to keep investing no matter what the market does. Reason is very simple. 1, over time, prices keep increasing. Also, goods and services, the prices keep increasing. So when you invest in stock market, you'll always be able to beat the prices or inflation. Second is, as you heard the man himself, over time, company increases their value, they increase their earnings, and also they increase their profits. So if you stay invested in the stock market, you're sure that your company you're investing in, if it is profitable, if it is increases earnings over time, your company, you'll be able to increase in value your stock, and also you'll be able to earn dividends in stock market. And also over a long time, the company, if it is doing well, if it is a strong company that you have invested in, it will be doing well over time. Second lesson is you should try by all means to rebalance your portfolio. There are two ways of how you can balance portfolio. Number one is, if you think the stock you bought has increased and you can see that maybe it is almost overvalued, what you can do, you can sell part of it. If you have also another interesting stock that you would wish to buy, you also buy that stock if you think also it is undervalued. That is one way to look at rebalancing portfolio. Second is having cash. As you heard himself, he said he has 110 billion in cash. In case he gets something that is attractive, he can cash in by buying stock. So as also myself, even you should have certain percentage of cash in your portfolio. In case the stock you have been following declines, you have the advantage to do what? To buy the stock. Also another thing is you can do dollar cost averaging. Like when the stock is getting higher, you can buy less of it, and when it goes down, you can buy much of it. But this can be possible when you have cash in your portfolio, that in case the price declines, you have enough cash to buy the stock. Number three, no matter what, some companies will always do better, other companies will always do bad. So you don't have to be scared. What you should know is you should at least give yourself a target that at least at this certain percentage I can invest in this kind of company. So what you have to do, you have to look for the companies that you love. Also, you start investing in them, because we already know over a long time stock markets are going to do better. So whether the stock market is going to do well or bad, as you heard, you can never know what the stock market will do today or tomorrow. But what we certainly know is over a long time stock markets will do well. I hope you have learned something from this video, and if you have more information that you can give us, please do not forget to comment so that you can also see how or when you invest in the stock market. Thank you for watching. Once again, please do not forget to subscribe or share if you think it will benefit your friends or other people, and also do not forget to hit the bell notification. In case I release another video, you'll be able to be notified. Once again, thank you for watching. Have a good day.